I'll call the meeting to order. Madam Clerk, roll call, please.
Each member is acknowledging that they are attending the meeting via Zoom and that they are located in Wayne County, Michigan, unless otherwise stated when I call your name. Commissioner Killeen.
Here.
Commissioner Dobb.
Here.
Commissioner Clark-Coleman.
Here.
Commissioner Kniezek. It says he's logging in right now. Commissioner Basham.
Here.
You have a quorum present.
Next item.
Really quick.
B, chair's remarks.
I don't know if anybody heard that or not.
I heard it.
I'm sorry.
Somebody needs to mute their phone. Next item, Madam Chair.
B, chair's remarks.
I have done. Next
C,
item.
approve of the April 21st, 2021 meeting minutes.
The motion
Move approval.
been moved by
Support.
Commissioner Clark Coleman and supported by Commissioner Kleen. Is there any discussion? All those in favor?
Aye.
Aye.
All those opposed? Ayes have it. Next item.
E, unfinished business. There's none listed.
Okay. Next item, Madam Clerk.
Item 1, under new business, communication from Marcella Cora, Wayne County Legislative Auditor General, forwarding a letter from Plant Moran PLLC, the county's independent external auditor, providing a required communication to the Commission, Committee on Audit, and the county executive on the results of its audit of the county September 30th, 2020 financial statements and related annual comprehensive financial report.
Well, I'd like to welcome at this time Auditor General Marcy Cora, her staff, and her guest. And Ms. Cora, please proceed.
I'm Marcy Cora, Auditor General, and we have representatives from Plant Moran. I'll have them introduce themselves, and we also have representatives from Management and Budget. They can introduce themselves too. So if Plant Moran could go first.
Thank you, Marcy. My name's Dave Helisek. I'll just introduce our whole team and they
Sure.
can kind of say hi as they go along. So my name's Dave Helisek. I'm an audit partner with Plant Moran. And with me this morning is Keith Szymanski. He was one of the senior managers on this year's audit of the financial statement part of the engagement. Tyler Luce, a manager who was involved with the financial statement part of the engagement. Manju Panayak, a manager who was involved with the federal programs or single audit part of the engagement, and Tara Sinowick, again, a manager with her firm who was involved with the single audit portion of the engagement. That's our team was a lot larger when we were doing the work, but that's who's representing us here today.
And if Management and Budget can introduce themselves.
Yes, my name is Yogesh Kisani, Deputy Chief Financial Officer, Management Budget. And Yui Newsom, the Chief Financial Officer, is going to join in a few minutes. And I will let Michael Bridges to introduce himself.
Good morning to all. I am Michael Bridges, and I'm the Assistant Director of Financial Reporting, and I've been here now for about 3 years, about essentially 2 audits, full audits under my belt. Good to be here.
Good morning,
And what we-
Shantika Bullard from
Morning,
Management,
Shantika.
Budget, Grants, and Contracts.
Welcome, everyone. And what we have before us today, this is the results from the financial statement audit for fiscal year 2020. We're going to have a presentation from Plant Moran. They'll go through the required letter of communication, the AU 260 letter, the single audit, and also the results of the annual comprehensive financial report. And the way we've outlined it is similar as we've done in the past. This is a meeting where Plant Moran will do their presentation. And if there's any questions, it can be directed for Plant Moran regarding their aspect of the audit. And then what we plan to do at the next audit committee meeting, when it's determined when it'll be, we will have the auditees come back that have findings so that the commissioners can ask the auditees, what their prospective corrective action is going to be for those findings. So if we can kind of gear our questions to Plant Moran for this meeting, then the other meeting will be more towards the auditees. And we can begin the presentation.
Please proceed.
Thank you, Chairman Basham. Again, my name is Dave Helisek. I'm with Plant Moran, and we're here to present the results of the financial statement audits and single audit for the County of Wayne for the year ended September 30th of 2020. So I think, as we're all aware, it was a rather unique year from an audit perspective. In the current environment, where we're required to actually perform this year's audit in a virtual/remote environment. So we essentially had, really months to prepare for this, for this remote environment, as did the county. And to be honest, while there were obviously some changes in the way we did take an approach, historically we've exchanged a lot of data electronically anyway. So I would say probably 70% of what we did, at least from a procedural perspective, actually didn't change. We put in requests from management budget as well as other departments and directors. That information would be loaded up on a website, or I'm sorry, loaded up in one of our collaboration sites. We'd be able to access it and work through our procedures from that perspective. What did change is historically information that we might have been able to physically touch in the past were actually uploaded in those same manner, and we were able to perform the procedures in a pure electronic and virtual environment this past year. As far as the audit itself concerned, it actually started in late summer, early fall of last year, where we start some of our interim work. That goes, normally through maybe mid-September, at least parts of it. But the majority of the heavy lifting and really of the substantial audit work falls from the period of December through March. And as everyone is aware from the audit committee, under Public Act 2, the county is required to upload the results of its financial statement audit to Treasury 180 days after its fiscal year end. In this case, that's roughly March 31st. And as you can see on the screen you're looking at right now, we were able to date our opinion for the financial statement on March 25th of 2021. And we were able to upload that to the Department of Treasury prior to March 31st for full compliance with Public Act. As far as the audit report, the letter and the opinion, so the financial statements are really the property of the county. We give an opinion on those financial statements. As far as the financial statement for the county is concerned, we were able to give an unmodified opinion with an emphasis of matter. I'll describe the emphasis of matter in a minute, but the unmodified opinion is the highest level of assurance that we can give a set of financial statements. What that means is these statements as presented fairly reflect the financial position of the county as of September 30th of 2020, and the change in that financial position, or the revenues, the expenditures, or statement of cash flows and notes that are included within that document. Again, the highest level of assurance that we can give, and one that the county strives to achieve on an annual basis. So I did mention an emphasis of matter paragraph. So what an emphasis of matter paragraph requirement is when there's a significant or substantial change in the reporting year over year to the financial statements. We need to include a quick disclosure in the opinion to make sure a reader is aware of that change. In this case, the county, through its diligence of its capital assets, realized that in a prior period there should have been some capital assets that were capitalized. Normally they'd just be the expense, and the county would go and identify and determine if any of them need to be capitalized. During a records review of some of the drains funds, it had determined that there were some assets that were, they were properly in capital outlay on a modified accrual basis, but needed to be capitalized, and made that change. The change was made consistent with the auditing standards and did not require a modification of our opinion at all. The letter to the Wayne County Commission, the Audit Committee, and the County Executive would be another set of deliverables. I'm not going to get too much into that because I know Tyler's going to talk about that a little bit this morning. But that would be I'd say the second set of deliverables as well. As far as the single audit is concerned, we're going to be touching on this quite a bit today. There's the financial reporting part of it. So, you know, I talked about the opinions and the highest level assurance that we can give. But as we go through the course of the audits, when something comes to our attention that we deem would need further addressing going forward as it relates to maybe controls, we identify that and report it to those charged with governance. In this case, it's the Audit Committee, and we're going to cover those this morning. So Tyler, Keith, and myself will be discussing the financial reporting portion of this, and Manju and Tara will be focusing on the federal programs. If we could move the next slide. There you go, Tara. As far as the single audit report is concerned, again, I'll give Manju and Tara, you know, I don't want to steal all their thunder, but the single audit report does include the schedule of expenditures of federal awards. Whenever there is more than $750,000 spent in any given year, and the county historically has been significantly over that amount, then a single audit is required. So this schedule includes all the awards that were reported by the county for the past year. It also includes notes to those awards and any schedule of findings and question costs, which again is going to be some of the information that we cover again this morning. So that's really the financial statement, the county financial statement, and the single audit. We also issue 4 separate reports. So the Wayne County Land Bank and the Greater Wayne County Economic Development Corporation, those are separate legal entities, and we issue separate financial statements with what we call direct opinions. And much like the case of the county, we were able to, as a result of our audit procedures, issue an unmodified opinion for each of those. Again, the highest level assurance that we can give those set of financial statements. As far as the Wayne County Building Authority and the Sewage Disposal Authority, those are actually just kind of spin-off financial statements from the county, larger county audit, and we issue what we describe as an in relation to opinion. So is there a question?
Just a call.
Okay. These are in relation to opinion. For the most part, the building authority and the sewage disposal systems are really then further carved out of the county financial statements and then reported in its own document and presented for those who can use that information separately. So again, in that case, we were able to issue unmodified opinions on those statements as well. As far as the financial statements, you know, and what our responsibility, you know, is for those statements, really our responsibility is to express an opinion on the fairness of the financial statement. So as I mentioned earlier, these really are the county's financial statements. Not only do they assemble the financial record keeping, but also the financial statements themselves. And then we, as part of our auditing procedures, or as a result of our auditing procedures, we determine if these statements are fairly presented in all material respects, and then we go on and issue our opinion as a result of those procedures. We need to obtain sufficient competent evidential manner to provide a basis for forming our opinion. And what that means is we need to take certain things into consideration. Obviously, the economic limits, the reasonable length of time, and the reasonable cost. So what that means is we, as part of our procedures, we do not test every transaction that the county enters into on an annual basis. We sent out a communication prior to the beginning audit to the audit committee that described our process, our plan, and how we plan to really attack this year's audit. So that means is that we give reasonable assurances. We don't test every transaction. We give reasonable assurance, but not absolute assurance as to the financial statement itself. Tyler, I think moving on to you to cover the next part of the graph, or the next part of the presentation.
Perfect. Thanks, Dave. Good morning, everyone, and thanks for having us here today. So as Dave mentioned, I'm going to take us through some of the general required end of audit communications. So just before I start, these are in slide format, but these slides would be representative of the information housed within the end of audit letter that's included within your packet. The purpose of this communication really is to close the loop in terms of scope, timing, and risks that we would have previously communicated in January. So just to start off here, we were able to complete the audit on time, and that would be in accordance with the timeline on the bottom half of this slide here. In terms of new accounting standards, we were fortunate enough to not have any new accounting standards to implement, which that was really the result of GASB 95, which was some relief by the GASB to delay implementation dates of certain standards. In terms of qualitative aspects of accounting, so in our audit, we did not note any transactions entered into the county that lacked authoritative guidance or consensus. In addition, there weren't any significant transactions that were in a different period than when the transaction actually occurred. In terms of management judgments and accounting estimates, so as in previous years, we did identify the 4 estimates shown here that were evaluated with respect to the financial statements as a whole. These are considered estimates in the fact that we weren't able to agree them out to an invoice or a bank statement, and they really do require the use of assumptions by the county. And we found that these estimates and methodologies all appeared reasonable through our audit procedures that we performed. The next couple of slides are difficulties encountered in performing the audit, and then the following slide is disagreements with management. So we are required to inform those charged with governance of any serious difficulties or disagreements with management or difficulties encountered during the audit. And on both fronts, we are happy to report that there were none in the current year. In terms of corrected and uncorrected misstatements, in the interest of time, I am going to save the majority of this content for when Keith and Dave take us through the audit findings a little bit later. But this slide does summarize the account types of adjustments required and also highlights that there were past adjustments that were identified during the audit. And these past adjustments were deemed immaterial individually and also in aggregate. In terms of management representation, this is just a reminder that as part of our audit procedures, we are required to receive a management representation letter, which we did receive, and that was dated similar to the other deliverables, March 25th. And finally, to our knowledge, there were no consultations with other accountants. So next, I believe I'm going to turn it over to Keith, who's going to take us through some of the control deficiencies.
Thanks, Tyler. Good morning, everyone. The next few slides lay out the different types of internal control deficiencies that can be identified during the audit. Starting with a general definition of any type of control deficiency is when we discover that the internal controls of an auditee are not working effectively to prevent or detect misstatements in the financial statements on a timely basis. So once we identify any type of control deficiency, we then go through an evaluation of how severe it is. And if it turns out to be fairly insignificant and doesn't rise above the level of a general control deficiency, we might have discussions with members of management, the county, regarding those control deficiencies, but they won't be formally reported in any of the deliverables. But as defined on the next couple of slides, there are 2 types of control deficiencies that are more significant and do merit communication to the audit committee and other members of management and elected officials. So a significant deficiency is a more severe control deficiency, but not the most severe, which is a material weakness. but yet we feel it is important enough to bring to the attention of those charged with governance, and we have formally done so in the single audit report. And then the most severe form of internal control deficiency is a material weakness. And this is when, based on our evaluation, there are not proper controls in place or controls that are not operating effectively to prevent or detect a material misstatement in the financial statements on a timely basis. So in some instances, this means that we actually did find a material misstatement and brought it to the county's attention for them to correct. And other times it may not have actually been a material misstatement, but we evaluated the controls that were there and didn't think that they were proper or effective enough to prevent a material misstatement. So even though a material misstatement did not exist, we think it was reasonably possible that one could have. And so as we report in our internal control over financial reporting, there were 10 financial statement audit findings this year. 7 of those were deemed to be material weaknesses or the most significant type of control deficiency. And 3 of them were slightly less severe, but still important enough to bring to your attention. And those are classified as significant deficiencies. So Tyler, if you don't mind switching over to share the single audit report with everyone, we're going to go through those 10 financial statement audit findings in detail. They are included in the report of federal awards. As I mentioned, there are 10 of them. The first 6 of which that I'm going to describe are all material weaknesses and all repeat findings from the previous year, and in many cases, at least the last few years.
Commissioner Basham, before Keith starts, how would you like to handle any questions that the audit committee would have during this next part of the presentation?
One thing about our committee is we're not shy. And if they have questions, they will certainly bring them up. But I would prefer, although it's just one commissioner out of the group, that we wait till the presentation is done and then ask any questions that we might have. Unless one of the commissioners sees it pertinent, they need to ask a question during the presentation. So I only chair the meeting. I don't control it. Thank you.
Thank you.
Please proceed.
Thanks. So as Tyler brings those up, I'll start to describe the first material weakness, finding 001. So taking a step back, in an ideal situation, the auditee, in this case the county, would record their transactions throughout the year, and then after September 30th, go through a fairly exhaustive process to close the books, record any timing differences, making sure that transactions related to fiscal year 2020 are recorded in the proper fiscal year, and those related to 2021 are excluded until the following year. And then a couple months after the fiscal year close, we, the auditors, will come in, evaluate the books and records of the county, and provide our opinion on the financial statements. Assuming we find no issues with the financials that is presented to us, we would have no findings to report to you. But anytime we identify a misstatement in the records, that likely has to be brought to the attention of elected officials and those charged with governance of the county. And so there were several instances in which we identified misstatements during the audit. A few of them were corrected and adjusted for in the financial report that you have before you. Those included adjustments to the estimated liability for workers' compensation, proceeds received from our revolving fund from the state of Michigan, and the beginning net position of the governmental activities. The second paragraph under the context here includes a fairly long list of misstatements that we identified that were not corrected by the county. That was largely due to the fact that they were not significant, they were not material to the financial statements. So the fact that they were not adjusted for in the financial statements does not change our opinion that the financial statements are materially correct. We look at each of these uncorrected misstatements both individually and in total to ensure that they do not materially change the reader's opinion of the financial statements. And given that they do not, it was acceptable for the county to choose not to record these items. In most cases, these were recorded or recognized fairly late in the audit process. So in the interest of time in completing the financial statements on a timely basis, the county acknowledged that these were misstatements but chose not to record that adjustment. At the bottom of the context, we do summarize the total value of those misstatements. For what it's worth, that was $37 million this year, which is about half of what it was a year ago. But obviously this is still, as I mentioned, a fairly long list and items the county should work to correct, implement procedures, reconciliation and review procedures throughout the year, and particularly at the end of the year to review this activity on a timely basis so that we get closer to that stated objective of the county cleanly closing the books and us coming in and auditing a clean set of books without identifying any misstatements. Finding number 2 is sort of what I would say is the cause of those misstatements that we identified in finding number 1. And that's the fact that there's an overall lack of appropriate monitoring of account balances throughout the year, and particularly at year end. So this obviously requires significant resources. In some cases, management and budget and other departments responsible for the accounting may not have the resources and the employee time available to do all these reconciliation and reviews throughout the year, depending on the significance of the balances. Some may be necessary to be performed more timely, others just quarterly or at the end of the year. But for whatever reason, there's an overall lack of proper review and reconciliation throughout the year. For those reasons, when we're coming in and doing our audit, reviewing the year as a whole, trying to reconcile different balances, the supporting documentation, we do identify a fairly significant number of misstatements as detailed in finding number 1. So to the extent possible, we do recommend the county work to ensure that all activity is being monitored and reconciled on a timely basis. Finding number 3 is a summary of all instances of non-compliance with state laws and regulations that were noted throughout the year. And these really fall into 3 different buckets. The first of which is non-compliance with the Uniform Unclaimed Property Act. This primarily relates to checks that have been issued by the county, both from their agency liabilities and the Road Construction Performance Bond Fund. And those checks were not cashed by the recipients. So they've become stale and really after a certain point in time are considered unclaimed property. And at that point, this state public act requires that money to be escheated to the state of Michigan and maintained in their unclaimed property database. Thus far, the county does not have a formal process in place to review these unclaimed checks on a regular basis and escheat those to the state. So there is a fairly significant number of checks that are stale and should be escheated to the state at this point. Next couple items relate to compliance with Public Act 2 of 1968, or the Budget Act. First of all, it would technically be a violation of the Budget Act anytime actual expenditures exceed the amounts budgeted by the commission and by the county as a whole. So there were noted areas in the general fund, the COVID-19 fund, the Criminal Justice Center Capital Project Fund, and several non-major funds in which expenditure line items did exceed the amounts budgeted by the county. And then finally, another aspect of compliance with the Budget Act is to ensure that the county does not budget to use more fund balance than a particular fund has going into the year, or to actually end the year in a deficit. And we did note a few instances with special revenue funds, the Law Enforcement Fund, the Community Corrections Fund, and the Victim Witness Fund that were budgeted to end the year in a deficit. In only one of those cases, with the Victim Witness Fund, it was the amended budget that called for a deficit at the end of the year. And actually, in none of those cases did the funds actually end the year in a deficit. But technically, to be in compliance with the Budget Act, the county should not have budgeted to spend more than what was available in terms of revenue and beginning fund balance. And then finally, we did note that there were no formal budgets adopted prior to the beginning of the year for the Greater Wayne County Economic Development Corporation or the Building Authority. Moving on to finding number 4. This item relates specifically to misstatements identified related to capital assets. And so while finding number 1 captured most of the general misstatements that we identified, we do feel that the issues related to capital assets were significant enough to break them out into their own material weakness. So the real cause here is that the county doesn't have a formal review process in place to effectively identify all capital assets, and in particular, infrastructure projects or groups of assets. So for the most part, when the county is purchasing a vehicle or a piece of equipment, we haven't had any recent issues with those items not being capitalized. But we did note a couple of fairly large issues during the year, one of which was the prior period adjustment related to the drain project that Dave alluded to earlier. This was a project that had been ongoing for the last few years, but had never been capitalized and added to the fixed asset system of the county or that particular component unit when it should have. So that was brought to the county's attention this year, and they did make the adjustment to capitalize all expenses incurred to date, including those in previous years. The other main aspect of this finding is the fact that there were a number of road and bridge construction projects that were ongoing during the year, in many cases involving participation from local communities, and for various reasons, those projects were not properly capitalized. Many of them were in process at the end of the year, so they weren't completed, but nevertheless, any expenses incurred during 2020 should have been capitalized in that year. With that, I will turn it back over to Dave to discuss the remaining financial statement findings.
Thanks, Keith. One thing I wanted to note as we're going through each of these findings, you can see it's broken out into a number of sections. The views of responsible officials in plan corrective action plans, while self-explanatory, are just that. Really, the first 5 or 6 items are written up by us, and the view of responsible officials is either the director or individual who would have been responsible generally for this area would have provided not only a response, but the corrective actions as well. So I just wanted to make sure I clarified the format of these findings. So with that, I'm going to move on to number 5. And as Keith mentioned, the first 6 are all repeat findings, and number 5 is indeed included there. So what we've got here is a finding on the reconciliation, or more so the timely reconciliation of the bank and investment activities. This has been a repeat finding not only for this year, but really for a couple years now. And the reconciliation is really a 2-part reconciliation, part of it done by the Wayne County Treasurer's Office and part of it done by M&B, Management and Budget. Each responsible for different parts of the reconciliation, and ultimately having it reconciled when the two put the reconciliations together and arrive to the same number. For the September 30th, 2020 year end, which is, we did look at some throughout the year, but the one we were really focused on obviously was the end of the year. I think that was finally reconciled in mid-February. So obviously a longer time, one that we'd hope for, but certainly I think that the county would hope for in having a complete reconciliation. Obviously, the reconciliation includes not only identifying reconciling items, but having support for those reconciling items. And the importance of that is if there's unsupported reconciling items, it gives the ability of the county to dig into those immediately and to trying to determine what those items are, and if further follow-up needs to happen as a result of that investigation. So, again, it's a coordinated effort by those 2 departments. It was mid-February before we had finally received and were able to finish our testing as it related to cash investments. And there was, in addition to that, there was some communication just in general that probably could have been better as it related to voids. And I know we spent some time, with Yogesh in particular, and he's working with the Treasurer's Office on how that communication can get better to make sure and ensure that the void information that's being provided from the banks essentially is consistent with what's being reported in the county's financial software. So that's finding 5. Finding 6 is again a repeat finding. We brought this up and discussed it again last year as it related to really, we'll call it kind of the jail monies, for lack of a better word, or the inmate property cash activity. And it really revolves around, in the context of a reconciliation of those monies. As you can see in the context, there's been some outstanding items that are significantly old, and when we say some of these checks at least go out 15 years. And in addition to that, the access to blank checks are accessible. Perhaps maybe to too many folks, but if there is need to have that many folks have access to it, there should be a pretty strict policy and procedure that really is put into place to try to control access to that information and to those checks, and a control procedure so that someone can follow up as to who's signing, who has access, and really how much of it is still in inventory. Again, this was an item that was discussed last year, and you can see in the view of responsible officials, well, we can't confirm that there's been an implementation since October 20, because that's falling outside of our a year of audit. That has been the response related to this particular finding. Item 7. So item 7 is again a material weakness. This is not a repeat finding for the next 3 or 4. These would all be newer, and this revolves around the downriver community and the forward DUA system. So you might be saying, Dave, why are we talking about what's now known as the DUA system? We sold that off a couple of years ago. Why are we discussing that now? You may recall, part of that system involved debt that was really judgment levy debt. So debt that the county had issued that a judgment levy was going to be used to cover the financing. So in cases like that, while some debt can be transferred, this type of debt cannot. So the county continues to hold on to that debt and receive monies from those communities who were formerly involved in that system to pay off the remaining debt service. As far as that is concerned, we had some adjustments, maybe some more significant adjustments. Keith mentioned, some earlier, but these were specific to the system, so we wanted to make sure we discussed it separately. It related to cash and receivables and liabilities, some fairly big numbers. The numbers were recorded; they just weren't recorded in the right fund. One of the things that we talked about, with management and budget and the right directors, is the importance to keep this activity up to date. And why I say that is I believe the agreement is indicating that the county will continue to collect these monies to the extent there is debt service related to them. So it's important, one, to keep this information up to date, and then secondly, to make sure it's being used and reviewed prior to sending out the quote unquote bills to the local units for the upcoming debt service. So there is significant cash balances on hand towards that debt service right now for the county. So the suggestion here is make sure that information is updated and make sure it's being reviewed when sending out the next round of invoices to collect from the local units of government. Number 8, again, this is a a newer one, and this finding is deemed a significant deficiency. So in this case, what's happened here is the county is distributing most of the tax collections that is receiving. So when the county collects on behalf of another party, or in this case another taxing entity, it'll collect it, it'll identify where it goes, and send that out in a time period dictated by statute. And so it's the tax collected to most authorities was done on a timely basis. At the same time, the amounts that weren't fully distributed, at least at this point, the county wasn't able to provide a detailed listing as to who those monies belonged to. So I know that the Treasury's Department is working through that and making sure it's identifying all the monies that are held in that tax collection area / fund and whom it's owned to. And while it's always been important from obviously a custodial asset standpoint, it's going to be even more important from a financial reporting standpoint as the county implements an upcoming standard, GASB 84. It's going to have a different reporting requirement on the monies that are both receipted and distributed to other taxing units. So it's going to be important to ensure that beginning number is not only identified, but is, I'll say properly distributed to the right entity throughout the year. Finding number 9, again, a new finding, a significant deficiency. And this really relates to the delinquent tax revolving fund. So I think as all of us know here, this is a pretty general statement. I know there's exceptions, but for the most part, when local units of government within the county are unable to collect all of their real property taxes by February 28th / March 1st, that those collections are turned over to the county, and the county attempts to collect them on behalf of the local units. You issue a combination of debt and use some of your reserves to essentially make the local units whole, and then you collect what you can. Anything that's non-collectible ultimately would be charged back to the local units. So that's a little background on here. What the issue we ran into is the county tracks the information that is sent over from the local units in the treasurer's office. And it's basically saying, how much has been turned over and how much has been collected. And there was a reconciling item of about 1.4 million as it related to, how much was actually collected versus turned over. So while not material, the treasurer's office acknowledged that and will be working to update their records to ensure that the collection efforts are duly updated, and the information as far as what was recorded and what is still to be received is consistent with the supporting information that's being maintained by the treasurer's office. And then finally, number 10, again, a significant deficiency. This really is related to an earlier item as it relates to bank reconciliations. The reason that this one's a little bit different is it really doesn't focus on the timeliness of the reconciliation, but it's ensuring that the reconciling items that I mentioned earlier are actually supported by transactions. And in this case, the county has a kind of a unique situation as far as how it's recording receipts around the last day of the year. it's one we're familiar with, working with the county as long as we've done it. I know it's one that the county that's worked well with the county throughout years. So we don't necessarily have an issue with that process at all. What did happen though is part of the reconciliation is the amount that was identified as quote unquote a deposit in transit, and the reconciliation wasn't agreeing to some of the deposit records that ultimately were recorded by the bank. So again, this was identified by us, but the treasurer's office in this instance is working through that. The amount, while larger, in the $2 million range, what we can say is, the reconciliation was kind of in the right way. There just needed, we saw the money, get into the bank. We just needed to make sure that the financial records were updated to show that that transaction actually happened before year end versus after year end. So again, that information and these, the last three that I did cover, we're really running through the treasurer's office. Representatives from the treasurer's office and M&B, including Yogesh, we spent some significant time going through that, and I'm confident that they understand it, and they're working their way to try to resolve each of those items. So with that, I'm going to turn it over to Manju and Tara real quick for one finding as it relates to the single audit, and then I guess we'll open it up for questions, Chairman Basham.
Thank you, David. Good morning, everyone. Tara will briefly go over the one finding that we had. But before that, I thought I'd just give a quick overview about the single audit. As David earlier mentioned, when we first started off the presentation, the most critical document in that single audit report is that schedule of expenditures of federal awards, which basically reports all the federal expenditures that the county spent during fiscal year 20 by each of the programs that the county received. So in fiscal year 20, the county expended about $181 million of federal expenditures. That's almost a little more than twice what the county has typically spent. Each year, you've typically average about $60 million a year. And primarily that expenditure increase was because of the stimulus funding received, and more so because of one specific program, which is the Coronavirus Relief Fund. And in fiscal year 20, the county spent $132 million of the Coronavirus Relief Fund. So based on the expenditures that the county incurred and the rules that we need to follow in order to determine what needs to be tested, which is provided by the federal government, it's called the Uniform Guidance. We tested two programs. One is CDBG, and the other one is the Coronavirus Relief Fund. And between the two programs, we tested approximately $135 million of the $180 million that the county spent in fiscal year 20. We were able to issue an unmodified opinion on both programs. And as David mentioned earlier, an unmodified opinion is the highest level of assurance that we can provide as an auditor that the county was materially in compliance with all laws and regulations related to these two specific programs. Considering the dollars we tested and considering everything that we did, we had one finding, and that is a material weakness. And I will turn it over to Tara to go over the finding a little bit.
Thank you, Manju. And I do think it's worth also pointing out that out of the $135 million that we're testing, as Manju said, 131 or 132 million of that was part of the Coronavirus Relief Fund. And as you can see, this is not what our finding relates to. So a pretty significant year for the county, and in terms of the spending involved under that stimulus. And that really speaks to the effort that went into making sure that the county was in compliance with that particular program. So the 11th finding that we have here is related to the CDBG program. This is a repeat finding. And so the requirement here is that any recipient of these dollars that expends in excess of $200,000 of public housing assistance is required to file what's called a Section 3 summary report. The county has not filed the Section 3 summary report since the fiscal year 18 for this particular program. And so, so we have this finding again this year for fiscal year 20. And we do know that in terms of, so there are no connected question costs related to this finding, and that is important because you know, without question costs, that means there are no dollars that would need to be remitted back to HUD as a result of this finding. So that is a positive. But what's happening here in terms of cause and effect is that there is a lack of process and control in place in order to make sure that there's that the filing is taking place, that someone has their eye on the calendar to make sure that the information is compiled and that the summary report is filed in a timely manner. We do know that the county is working with HUD and has been working with HUD to, number one, kind of get through the wrinkles in terms of accessing the reporting site, but also to come up with a plan to issue both the 2018 and 2019 reports, as well as to catch them up to 2020 as well. But that's really the finding in summary.
Thanks, Tara. And then just real quick before we get into, you know, any questions on those findings, if we could just roll through maybe the last couple slides. Thanks, Tyler. So we've talked about a lot of what we've done. I was talking there to make sure my mic was on. You know, and while it really does focus around, you know, transactions that the county's entered into, the standards do require us to consider fraud in the financial statement audit. So internally, prior to our start of the audit, as part of our planning discussions, we openly have discussions on these points. You know, where we believe, you know, the financial statements might be susceptible to material misstatement. What conditions might be present to allow fraud to occur? How could management perpetrate and conceal fraud? How assets could be misappropriated? So that's part of our planning process. So we, as an independent third party, can you move back there, Tyler? We take that into consideration, and it's not just a, hey, you know, check these boxes. We have open discussion based on our knowledge of what the county's existing controls are, what prior year findings look like, and determine where the county could be most susceptible. And then we tailor our audit approach towards those high risk areas. So that's where we start from an internal standpoint. So while we don't audit for fraud, we understand that it could be out there and try to tailor our approach to the point where it exists, we may be able to identify that. On the next page, so that's what we do internally. The standards also require us to make inquiries to you, the county. So on the next page, we'll talk a little bit of, you know, we'll disclose who we talk to, some of which are, you know, involved in this meeting here today. But we're asking you, one, what your understanding is as it relates to safeguards, fraud risk, and what steps the county has taken up to try to reduce its risk of fraud. We actually ask if there's anything specifically that you're aware of. You know, back in the day, and in the Enron case, you know, a lot of the follow-up as to, you know, how many people actually knew about it and didn't say anything, the common response was, well, no one asked me. Well, when you hear that enough times, it goes into the auditing standards. It says, okay, now we're going to specifically ask not only about, what the policies and procedures to prevent fraud are, but are you aware of any? So again, we take that information from the folks that we talk to. There's certain folks that we talk to every year, and there's certain others that we rotate through. So we take that information, put that together with our internal discussions, and I'd say tailor our approach to try to identify any significant risks in this area that have been identified. And then Tyler, here's on the next page, this is really who we've talked to. So we talked to 4 elected officials. One's always going to be the audit committee chair. One's always going to be the commission chair. The other 2 will be rotated through. We've talked to some financial executives and then other individuals throughout the county who might not necessarily be in a management or director type position. So again, those will rotate. As far as the elected officials, for those of you who are on the call that we haven't talked to yet, don't worry, we'll get to you as part of the rotation. But at the same time, when we do send this information out, you may recall we did talk to, had our discussions with all these officials. We did send a communication out that allowed anyone who had any concerns about the audit in general, about fraud, to reach out to me directly, and we could have a one-on-one conversation. So we don't want to limit it to the individuals who we talk to. We summarize those discussions, send out what we call a pre-audit communication, and do give all members of the commission, not just members of the audit committee, but all members of the commission the opportunity to contact our firm with any concerns that they may have around any specific areas. So with that, we'd be happy to discuss anything that we covered, anything perhaps that we didn't cover that you'd like to have covered, and I'll turn the floor back over to the Auditor General.
Well, let me just jump in there. I know there's a number of questions that members may or may not have, and actually I have some if you're ready. And just from your perspective, Dave, I won't ask you about what's it feel like to wear a tie, but from your perspective, is there any one area that should be addressed to reduce the number of repeat findings that we continually get in Wayne County?
Well, I mean, so to reduce the repeat findings, I think that there should be, I'll say an active plan to address each and every one of these items. And why I say that is we need to keep in mind that for us to report each of these findings as either a significant or a material weakness, we deem it significant enough and important enough as a firm to report it to those charged with governance. So, from my perspective, our requirement is to present these results to audit committee. Okay. At that point, audit committee then has to determine, what the pros and cons are and working their way through. So to us, all of these are important.
Okay, then to that point, then let me go to budget and finance and ask you the same question. From your perspective, is there any one area that should be addressed to reduce the number of repeat findings from budget and finances perspective?
Yes, this is Yogesh Kisani, Deputy Chief Financial Officer. And yes, we are trying to address each and every finding, since some of them are definitely a repetitive finding. But as you know, last year was a really challenging year, right from the March. COVID came out, our staff went on a furlough, and there were a lot of technological challenges were there too. And by the time we are trying to set up system and other stuff, it took us a real time. And we were able to bring some of the employees back as of in October, but there was a constant battle, just to finish a day-to-day operational work, even because of the remote remote, and printing issues and so many other issues were there. So going to give a good example of I would say capital assets. We were in pretty good shape until January or so forth. And one of the person who was trained, was furloughed because he was the most junior one. And by the time we brought him back, it was almost took us 4 months. So those kind of challenges we were going through, and we were still managing it.
Okay, let me, and I'm going someplace with this. So if anybody from the administration would like to comment on that, so we don't have the repeat findings again next year. Andy or anybody else from the administration would like to comment?
Yes, Commissioner, this is Huey Newsom, CFO of the county. I'd like to also chime in a little bit. Yogesh makes very solid points. We had COVID. You know that we have challenges hiring people. We are understaffed in MB. I can't speak for the treasurer, but I'm very sure that his staff would reflect the same concerns. But I do want you to know that Yogesh, myself, the county executives team takes this very seriously, and the county executive has directed us to really address compensation. I think there is a compensation study RFP that is actually on the street now, and so we've talked about these sorts of things, and now we're actually starting to do things about them. The other thing that I think that you all have been aware of, I'm gonna go back on camera. People can see my face. Sorry about that. Not my best angle, sorry. But the other thing that you should be aware of too is, the ERP project is going under the county executive's direction. We've invested millions of dollars into upgrading our systems because we need people, but we need updated systems to do that. So I want commissioners to understand that we are actively looking at how we're going to address these. We understand that repeat findings are a reflection on everybody. It's a reflection on the commission. It's definitely a reflection on MNB, the county executive, the treasurer, and all other involved departments. But we are making progress and spending a lot of time in addressing the people shortages, but also the technological inadequacies that are there as well.
Yeah, so you agree with us that maybe a lack of staffing is actually contributing to this major issue that we're having. It seems like
it definitely isn't it definitely isn't helping. That's for sure. It's definitely not helping. I mean, if you have budgeted for 120 positions, that means you need 120 people to fill those roles and responsibilities. And if 90 people are there, then there's a problem.
But the administration is actively working to combat that issue?
Yes, that is correct. Yes.
Okay, that's a yes. I'll bring it back to you next year. So thank you.
Okay. Understood.
Okay.
Not a problem.
Any commissioners have any comments, questions?
Commissioner Basham, could I just make a follow-up?
Sure.
So part of this presentation, I know we've talked about what you'd like us to report on, and because much of the statement stands for itself. I mentioned the unmodified opinion. The one thing I want to make sure that we do acknowledge is just really, I think, the tremendous effort put together by your entire financial team, and that wouldn't just include the folks in M&B and the CFO office, but everyone involved in the audit. I mean, as Mr. Newsom had indicated, not only were we working remotely, but the county was working remotely, often during the year. There was continued complex transactions. Things needed to be done a little bit differently. Was it a little bit heavier of a lift? Yes. But in the end, the county was still able to comply with the requirements of Public Act 2 to get the audit done and filed by March 31st, which, I think all of us who are involved with that, both from, the external auditor side, the Auditor General's Department, and the county finance side, realized that it was going to be a heavier lift, but the effort that was put forth by all enabled us to have this meeting here today and really have the information uploaded, which I think ultimately was only about a week later than it had been in the previous year. So we spent a lot of time, on the findings, and I just want to make sure that the proper, acknowledgements go out, to those at the county side who were involved with the audit, because they did do a tremendous job to get us through in the environment that we were, we were all dealing with. So I just wanted to make sure that that was communicated as well.
Thank you. Any commissioners got any questions, comments before I got another one.
Mr. Chair, commissioners have, and our Auditor General have their hands up. I think you've mentioned before that sometimes. Yeah.
Now I can see it. I'll start off with Commissioner Kleen, and I got.
Well, I'd like to hear from our Auditor General. I'm sure she's responding to something pretty specific.
Go ahead, Marcy.
I wanted to kind of add on to what Huey and Dave also said, and we need to remember too on this financial statements for 2020, Matthew Dubé, who primarily handled the financial statements, left in December of 2020. So I think it was a big task for Yogesh, Michael, Shantik, and Huey to pick up when Matthew left. And I just want to say that I think they did a tremendous job being up against what they had.
Okay, thank you. And then Commissioner Kleen, you had comments?
Yeah, well, I have a few questions,
Sure.
Mr. Chair, and a couple of comments. Of these 5 to 6 repeat findings in this single audit, how many of those are repeat findings?
So,
and I think some are even repeat findings.
Yeah. So, so I, the ones that are related to, and Keith, help me on this. I think one, these are the financial statement, records. I mean, that's really going to be something that's going to be really difficult to not have, because there's, as part of the audit.
I don't want to get into all of that, sir.
Okay.
Just how many are repeat findings?
One is, 2 is, I think 3 is.
5, 6. Yeah, so we have some repeat findings.
Oh yes, absolutely. Yeah,
and that's
probably 4 to 6.
So I want to go back and talk about staffing a little bit at this point. In the current budget year, how many unfilled management and budget staff positions are in the current budget as we sit here today?
I'll take that. I know I submitted a report, Commissioner. I can dig that up for you, what that looks like, but I'm gonna give you a rough estimate off the top of my head. Yogesh might have to correct me, but roughly we're looking at about 25 to 30 people. So you're looking at about 115, 120 budgeted positions, and right now we're south of 90.
So
right now, but I will be 90 people. But let me make something very clear. So about 25 people. But our focus, as you know, we haven't been pulling our thumbs around to address this issue, right? I think there are a couple of challenges that are kind of new, that weren't here this time last year. On the budget side, that we have not been able to fill the budget director position on a permanent basis. I came before the full board and Ways and Means to ask, or GovOps to ask for permission to bring in a firm to help from advisory standpoint to address the fact that we don't have that leadership, if you will, in a permanent budget director position. Yogesh was just promoted to deputy CFO, but his position remains his backfill still has not been determined yet, and we are interviewing for that position. So we have 90 people working in management and budget today? Probably less, a little. I think probably if I were to do the role right now, be 88.
In your budget, you have 25 paid for and unfilled positions, more or less.
Roughly speaking, yes.
Okay. Because I've been tracking this. This is my 14th, 15th year on audit, right? And you see this year over year. And I have been very carefully watching and concerned about the number of people in management and budget, as well as institutional knowledge. Out of those 90 folks, how many have more than 10 years, roughly? I don't need a list. How many people do we have with more than 10 years experience in Wayne County management and budget?
Wayne County management and budget, I say definitely less than a quarter.
Yeah. And if you could estimate how many have, well, let's say how many have more than 5 years experience with Wayne County management and budget? Half your department?
I would say less than half.
Less than half, yeah. And see, I think that's an issue we're dealing with, and now we're kind of farming out, doing some work, getting the budget ready. So I'm all behind. Are you changing your? Well, I'll note for the record that about 2 weeks from now is when the 21-22 budget is due to the Wayne County Commission per the charter. Right around June 1st is when it's supposed to be delivered.
June 3rd, if I remember correctly, yes.
Yeah, we haven't. Yeah, that 120 days. That's what the charter says. And we haven't met that in a couple of years. And this year we brought in an outside firm. But in that budget, are you requesting more positions for management and budget?
I think there are a couple of things that you have to consider. I mean, requesting more positions, and we're struggling to fill the positions that we've previously requested.
Is there just not enough people out there to do public accounting anymore?
Well, the problem is that's part governmental public accounting, or being in a CPA level talent like a Yogesh to come in and focus on governmental accounting is a challenge. We have to obviously compete for that talent with other municipalities. And then on top of that, the field itself is short people because most people go into the private sector because there's more money in the private sector and the benefits in the public sector. And I'm sure you've heard all these stories before. But again, I want to make this very clear for the record. We're not twiddling our thumbs here and just saying, woe was us. We're looking at, we're looking at more out of the box thinking. Can we find short-term help to help us develop, upgrade our technology so we can, if we have to live with fewer people, we can do that through an upgraded ERP. Can we bring in outside, firms to help us in the short term to kind of clean things up, if you will, so that it's easier for those people with less experience to kind of hit the ground running. So we're trying to be creative in the way we're thinking about this, as opposed to coming to you every year and saying, "What was us?"
Yeah, and certainly, Mr. Newsom, I've followed this long enough, and I know how hard people are working and that are shorthanded.
I appreciate that.
So, and I am, whatever, and I also understand that maybe even the universities aren't educating people in public accounting. It's all in the private too. So you're not getting people coming out of universities with you have to train the university graduates. I'm also going to note for the record, and since that last finding on the home program came up, I opened my Detroit News this morning, and here's HUD taking over the Housing Commission in Highland Park. So in the back of my mind, I don't know what all the relationships and discussions are between the county and the state and the feds on these matters. But in the back of my mind, I'm like, okay, seeing these repeat findings, how long is it going to be until the feds come in here and go, we got it from here. So I'm just going to note that for the record. And I, the fact that they haven't been here yet tells me something. But I also have a quick question on finding, and you don't have to go back to the slide, on finding 8 about undistributed property taxes to taxing units. Can you give me a couple of examples of what those units would be? Are these our DDAs and that kind of thing?
Normally, Commissioner Kleen, this would normally be any non-county entity that you're collecting on behalf of. So in those cases,
yeah, I know, but I'm asking just for a couple of examples, just so I know what those are.
Yogesh, that'd be like RISA, probably, right? Wayne County RISA. They're like county They're county millages, but they're not really county monies.
I gotcha.
So like a Wayne County research, we had like 3 or 4, I just don't recall them off the top of my
So
head.
we haven't had any problems with people getting the right amount of money. It's because I would imagine we would hear about that.
Well, this year we didn't. Like a couple years ago, I think there was an issue that was corrected. Yes.
Okay. Let me jump in if it's okay, Commissioner Clean. I got Commissioner Dobb. We got 15 minutes to our next meeting, so I'm going to try to move this meeting along a little bit. You got anything to finish up, Commissioner Clean?
Well, as I always say, Mr. Chair, this game that we play in public service doesn't have a clock to it, and so I play baseball, and we play till the. But Mr. Chair, I'm good.
Thank you, Commissioner Dobb.
Thank you, Mr. Chair. I just have a question on the findings for the sheriff's office with the jail inmate system for the cash management account. Is that managed by the sheriff's department, or is that managed by management and budget?
Yes, Commissioner Dobb, I can take that. No, that is not managed. That is managed by sheriff's office at their director of administration. So it's not managed by management budget. And I think just to let you know, that has been fixed. There was a fiduciary responsibility, and I think that has been fixed as of October of 2020.
Okay, well then my second question was going to be with the new ERP system that we're getting, will that apply to the jail inmate system as well? And will that make things easier for them to return cash to inmates?
Yes. So that's what we are working on, a chart of accounts and overall setup of the system. And the goal is to have a really transparency in entire county operation. So short answer is yes.
Okay, all right.
If I could add on to that too.
Yeah.
For the jail inmate, our office is doing an internal audit of the jail inmate system right now. So we should have a report, I would say, within 60 to 90 days where we're taking a deeper dive into the system and the checks and the reconciliation. So we'll have more on it probably within 90 days.
Okay, great.
Thank you.
Thank you. That's all I had. Thank you, Mr. Chair.
Okay. Don't see any more hand ups. All right. I got another question. What is the impact of having to make adjustments to the capital assets? And, do you want to answer that one?
Well, I just want to make sure I understand your question. So are you talking about how we make determination on what's to be capitalized and making sure that we're managing our capital assets properly? I just want to make sure I understand your question.
Yes.
Okay. Well, one thing, and Yogesh is going to again chime in as well because he's closer to it than I am. But one thing that we have looked at is making sure we have the right person in the right spot. And one of the things that happened during COVID, we kind of went on furloughs and had I'll say a cessation in employment. And so we had some movement in terms of our personnel responsible for managing our capital assets and accounting for those capital assets. And so what happened was, we almost had to start all over again and train somebody else on what really is a very specialized capability to account for our capital assets and maintain that, maintain that as well. Our goal is a couple of things. Now that we finally have continuity in that position, and so now that we have that continuity, our goal now is, okay, fine, let's make sure that we document procedures as well as communicate those procedures to the different departments, because there needs to be that alignment with departments. But also, let's leverage the heck out of our upgraded our new ERP system, so that can help us do this as well. So that, and that if you talk to me about any other findings, potential findings, you will hear that on repeat, right? Because that is what we're trying to do on the budget side and the financial reporting side. Really ask ourselves, let's sit down and look at all the, how we're going to do things in the new system, whether it be capital asset management and accounting, capitalization rules, capitalization decision-making rules. Let's document what that looks like. Let's make sure that we leverage the functionality of the system as much as we can, and then make sure that we go live with that new system the way we intend it to work. So, you know, I preach this to my team all the time. It's not just people, it's people in technology. But you don't go get a new toy unless you've sat down and understand the processes, right? So what does that process look like? I think we have the expertise in the right spot to do that. But on top of that, now it's a question of, okay, let's leverage technology and make sure that we're writing things down so that if something happens to our specialists that we now have in place, we don't lose continuity.
Thank you.
Yogesh, did you have anything to add?
Can I add something, Commissioner Besson?
Sure.
Yeah. So I'm going to say on the positive side how we made a significant improvement in the capital assets. And again, in 2015, as we all know, because of the early retirement to everyone, most of the institutional knowledge, we left at the county. We lost at the county. Sorry. And I think one of the person who was doing a fixed assets for last year, last 10 years, we left to the county airport because, they were paying him more. So after that, there was almost 4 or 5 every year. There were changes in the personnel, and capital assets by nature in a J.D. Edwards and a system is very complex in the county. So we made those significant changes. Every year there were different personnel. And finally we settled for that one person for almost last 1.5 years. And then furlough came and then came back. But anyway, having said that, there's other dependency for a construction project. And that's one of the repeat finding is coming in capital assets because of the Department of Public Works. There are non-financial folks are sitting engineers and everything. They sometimes do not understand the timeliness of the submitting invoices and everything. So by the time we come to know in January and February and say, hey, still there are some invoices are left. So I think we are working with an DPS Finance at this point to make sure that they work with the engineers on the field and other folks to make sure that we have all completed records for the year end.
Yeah, now you made a comment about J.D. Edwards. We're spending millions of dollars to upgrade our technology because for the last several years, we've been hearing everything about not just staffing, but also technology. So hopefully we can resolve some of these issues so that the newer folks can actually work with the technology and try to bring us full circle. So anyway, will that help, you think, with the new technology? It'll help so we're not tied to J.D. Edwards anymore?
Absolutely. Yes, absolutely.
Thank you. Any further comments from commissioners? Nothing else? Okay. Anything from our Ms. Cora?
No, I'm all set. Thank you.
Okay. And also, just because we ask a lot of tough questions don't mean we don't appreciate our auditors, external, internal, and also our budget and also the administration. So just from this, I appreciate everybody working together and rowing together and trying to accomplish a common goal. So I didn't want it to just ask tough questions and then not feel like we don't appreciate you, but we certainly do. Thank you.
Thank you.
Appreciate you. Madam Clerk, next item.
We get a motion for this item?
Move to receive and file.
Oh, it's been moved to receive and file by Commissioner Dobb. Is there support?
Support.
Is that from Commissioner Coleman?
Yes, it is.
Okay, and is there any further discussion? All those in favor, say aye.
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 Aye. All those opposed? The ayes have it. Next item, Madam Clerk. Thank you.
F, such other matters as may be properly submitted before the committee.
There are none. Next item.
Public comments.
Is there anybody from the public who would like to comment? Anybody from the public would like to comment? Last time, anybody from the public that would like to comment? Aiden, anybody? Okay, next item, Madam Clerk.
Adjournment.
So
Is there a motion? Been moved? Is there support?
Support.
Been moved and supported. Is there any further discussion? All those in favor?